Today we have Brendan with Prestige Weather, and we're going to do a little bit of talking about the weather and how it affects natural gas. And what's on the agenda for today?
So let's see. Okay, first, let's talk about the fact that crude oil is below $70. Natural gas is below
I didn't do it. It
$3.
wasn't me. It was somebody else.
You didn't do it?
No, it was somebody else.
Well, we are entering an election year, and there's always pressure to push gasoline prices down. But what's interesting is that the gasoline prices and crude oil prices do increase our economy because we do have so much shale production. So crude is below $70, natural gas is below $3. Okay, so what's happening on crude oil? There's demand concerns, right? There's recession. Well, before we get into that, here's what we're going to do. We're going to talk about crude first, then we're going to talk about natural gas. We're going to spend about 5 to 10 minutes talking about the energy markets. And then Brendan with Prestige Weather is going to spend a little time and talk through where we are in winter, what's ahead, because there are so many people on the natural gas side that are pulling their hair out going, wait a second, I'm wearing shorts. It's December. What's happening? So Bill and Brian are not bright when it comes to weather. Of course, Bill is an amateur weather person.
Storm chaser.
Weather anomaly. Can we make that a word? Weather anomaly. He's a weather anomaly. So
Absolutely. Actually, wherever I go, I cause abnormal weather. And so that's why I live in Oklahoma, because nobody notices.
Right.
Because we have abnormal weather all the time. But I've been to the desert in flash floods.
Yep.
I've been to Wisconsin in December and no snow. Had a white Christmas in Houston. So I've got the resume.
Let's see. And hey, Giorgio, how are you? Thanks for showing up. Appreciate you. And so what we're going to do is we're going to talk a little bit about crude oil real quick, natural gas, and then we're going to go through some of the fundamentals on natural gas. And then we're going to open it up to Brendan with Prestige Weather. And for any information, there's going to be links down below in the comments. And it's pretty simple, prestigeweather.com. Anybody can sign up. It's only $5 a month. I'll let Brendan talk about his service a little bit later. We are fortunate enough to be working with Prestige Weather on a variety of weather products for our platform, which is Energy Rogue, which we focus on fundamentals for supply, demand, imports, exports, storage stocks for natural gas, for crude oil, refined products, electricity. What am I missing? NGLs is the other one. So in the United States, but that's kind of our format. We're probably going to be here for about 30 minutes. Don't hesitate to ask questions. We will answer those questions along the way. But let's first take a look at what is happening on the market. So let's look at crude oil. And for anybody that hasn't really noticed, we went all the way from this $90 level down to 69. We're currently below $70 on crude oil. And the majority of the reason is because of demand concerns, because of recession concerns. The last one that I heard was inflation concerns. China imports in November were 9% below last year's. And on crude oil in general, I think my sentiment is that we have been hearing these same concerns for a year and a half. So when is it showing up? I don't know. There are a lot of leading projections that might head towards us pointing towards a recession for next year. Boy, if that doesn't happen, things are going to reverse in a big kind of way. Don't you think, Bill?
Yeah, I was listening to a guy today, and he's talking about, how you how you keep from having a recession is the economy has to have money in it. And he says, so in 2024, if the government pumps money into the economy, it could forestall these recession for till after the election. Interesting thought. Never thought that the government would do that. Yes, I know. Vicky is getting back at me because I called.
Hey, Vicky. So, so the recession talk has been coming across and for some time. So crude oil, it is stabilizing right around $70, which leaves Brent 72, 73. But we're not going to talk about crude oil today. We are going to talk about natural gas, which has a similar path to where we have fallen from the 240s, and actually we went way up here. We were up around 280, and we have fallen back beneath into the 230s. 231 is kind of a key point there, but a big reason why is because of weather. And another reason why is because of production. But I do want to show a couple of quick things. The last couple weeks, we have had the highest demand. We've had 10.5 BCF a day higher demand than in 2022 and 2021. That's a pretty significant number. But a lot of people are looking at sticker shock number on production, which is
Right.
currently up above 105 BCF a day. That is 4.5 BCF a day over that same period. Now you may ask, well, wait a second, demand's up 10.5, production's up 4.5. What's happening? I'm taking a snapshot of 2 weeks. So this is when it becomes very important to take a look at weather projections, because that is going to be the deciding factor on price. But this is my little cheat sheet, and I wanted to reference a couple things. The EU, yes, they are 90% full, and they are more full than in previous. I guess the glass truly is half full in Europe. They are.
Yeah, but Brian, you got to take that with a little bit because prior to when we're showing that they're higher than they were prior to, they were still bringing gas in from Russia,
Mm-hmm.
and
Yep.
so they had the European storage when it's completely full only holds about 25% of their annual use.
Yep.
And so when they had natural gas coming in from Russia, they had that, lack of a better term, they had a great pipeline of a supply coming in. With that cut off this year, this is becoming a little bit more of a non-traditional look at what they need to have in storage and how fast they're going to burn it based on the weather.
Well, I don't know what to say except it's Christmas and we're all in misery.
So, so when we think about demand in Europe, and Brendan, thank you so much for joining us, because Brendan is going to walk through European weather as well as U.S. weather, so that we can look at the rest of December, so that we can look at what's coming in January through March. Because for any of you on the stream, or if you're watching this after the live stream, joining Prestige Weather is very simple. Prestige Weather, sign up. It's $5 a month, and you get insight into what is going to happen on the forecast. And these guys have been spot on. We've been engaged with them since the summer, and they said, well, we're going to have a slow start to winter, which is 100% accurate, and then it's going to go through some periods, and then the latter half of the winter we're going to be cold. But as anything, weather can shift, weather can change, and that's part of the reason having him back is so important, and subscribing to them is so important. But let me show a couple things on fundamentals before I hand it over to Brendan. But let's take a quick look at the supply side of the equation, because something that I discovered, or actually one of our Rogue Nation members discovered, is that we have entered a period of ethane rejection. For those of you that don't know what that means, it means that they're gonna keep ethane in the gas stream, and that artificially increases the volume of gas, or the heating value of gas that we have, because in October, November, we shot up to 105. Not all of this is because of
No,
ethane rejection, but
I
there.
would say about close to a BCF would be though.
Yeah. So it it explains a lot. And Tom, thank you for bringing that to my attention. And for those of you that want to get serious on energy information, our service, Energy Rogue, or Rogue Edge, on energyrogue.com is $89 a month, and you have access to everything that you are staring at that has interactive downloadable charts, and we cover supply, demand, balance, storage, stocks, financial. We do offer our price projections. However, we are not financial advisors, and we are not a trading service. We provide fundamental analysis of the energy markets, so that if you are serious about energy prices and where the market may be going, you need to know this information. You don't have to subscribe to us, but do yourself a favor and do some research. And we've aggregated everything for you to understand the U.S. market. So did I miss anything on that, Bill?
Well, we also have a Discord channel, which is a really good place to get daily information where all of our members, it's a community, and we help one another try to evaluate where the markets are going, what caused this, what caused that. And it's a place where you can share and learn at the same time. And
Yep.
so it's, and we have some really smart people out there that are helping us. And we just try to, as a group, begin to think better about energy prices and energy commodities and where they're going. So that is all part of Rogue Edge right now.
Yep. So with that said, production is up. We have projections. We're not going to talk about declines today. We have projections that this is about to start tipping over. If you want to learn more, there's information down below. And on the demand side of the equation, let's take a look at this real quick. And then we'll pass it over to Brendan. So if you look at the previous 12 months, I mean, we are in a higher place. This was last year, and this is this year. We're in a higher place. This is backward looking. So this is historical and not forward looking. And a lot of the forward looking, and thanks to Prestige Weather, we actually have these forecasts that are on these charts as well. And then we also incorporate the NOAA forecast. This is a big reason why we have been so bearish, or that the market has been so bearish on natural gas, is they see a lot of red. Of course, that changes quite a bit. So with all that said, I'm actually going to hand this over to Brendan to say what is coming for the rest of December, for the US, for Europe, what is coming January through March for the US and Europe. So,
I guess, guys, the real question, Bill, do you still have the kiddie pool going in your backyard?
And do I need to get my Mr. Rogers sweater? No, we actually closed that up because now I have the fun of actually pumping the water off of the cover. So yeah, so I'm always moving water no matter what's going on.
Well,
so if we could keep it dry a little bit, that it could become a skating rink.
I mean, listen, it's really has been it's been interesting, but to be honest with you guys, we're really not that surprised, right? Because as we talked about over the last several weeks, we were expected to see this fluctuation, but overall, I mean, if we look at this from a macro point,
you've been spot on. You said November, December going to be very choppy.
Thank you. So far, so good. I'm batting 1,000 for now. Let's keep it up.
Knock on some wood.
Knock on wood, right? But yeah, I mean, listen, it's overall, even in the last week or so, we've really been quite warm, right? I mean, there's not really a lot of cold air going around. And so I want to start with this. I mean, a lot of times in weather, we're so focused on the weather models. But as I've sort of preached here on these discussions, it's important to show what's happening right now in order to see where we're going. So this is our good old 500 millibar chart. It's the jet stream, right? And you see this big divot right over the Rockies. See how that jet sort of does kind of a Ferris wheel arch, if you will.
Right.
That is signifying an area of high pressure.
Okay.
That same ridge, which we won't necessarily show here, but what you'll see in the temperatures here in a moment, is going to continue to move off towards the east. So that's going to eventually encompass places like the East Coast, the central United States, all the way back down even into the mid-Atlantic, seeing above average temperatures. And that's expected to stick around here over the next couple of weeks. So you'll see it in a moment, guys, but here's sort of my thoughts, right? We've been saying for the last several weeks that this winter is going to come in two halves. We're going to have the first half being pretty much overall slightly above average with some fluctuation, which we've seen.
Yep.
But then the second half is going to be a little bit more on the switch towards the colder side. Now, I want to clarify, though. Once we walk away from this season, by the time we get to next summer and we look back, we're both going to agree that overall, it's going to be above average this year with temperature. However, as we've seen in years past, particularly 2015, 2016, that was a year that also had an El Nino similar to this and had the exact same situation. We were talking about temperatures in New York City on Christmas Day in 2015, 70 degrees, all-time records on Christmas Day. But then, once we got to January, the cold snow machine turned on, and we had a nor'easter or two move through the region, dropping 30-plus inches of snow. Complete 180, right? So when we look at the ensembles, it actually sort of prices that idea in, right? So if we take a look here, this is the GFS ensemble. It gives us a general trend on where we're going. Also gives us some forecast confidence here. And this is just going from, say, the 13th all the way into Christmas. These reds you see are above to well above average temperatures for the central United States. And it's for the
that's versus what period?
This is a 30-year climate average from 1991 to 2020.
Okay.
So this is using the last, say, 30 years.
Okay.
So above average temperatures for the regions we expect once that ridge moves through, encompasses the central and eastern United States. So places like the upper Midwest will be well above average. Even some above average temperatures going back into the Northeast as well. Slightly above average, right? But still warmer than average. Now, this is just going into December. Like I just mentioned, if we look at El Nino, even just back to 2015, 2016, we had that flip. You guys remember a couple weeks back, last time I was here, which was before we all got stuffed with Thanksgiving food, we were talking about, I'm still stuffed from it. We were talking about the temperature flip in the short term. Remember how we had that cold flip that happened the week after our discussion? Well, now let's take that same idea and go month to month. So we can look at one of our climate models here, the CFS, right? This is right now for December. Watch me go into January. There's that flip, right? So now we're talking about below to even well below average temperatures for some of the major population centers of the Northeast New England, from Boston to New York City, all the way up to Bangor. Meanwhile, some slight above average temperatures towards the Midwest, even the Rockies with that snowpack, as well as California. Then, if we go into February, same situation. So if I can real quick say, and sort of explain why, what we've seen right now with our jet stream, we have two jets, right? We have a polar jet that cuts across the Canadian provinces, and then we have a Pacific jet. In the case of El Nino, our Pacific jet is stronger and more amplified than our polar jet, meaning that any cold air that's typically transported from the north southward is pretty much non-existent.
Okay.
Well, as we lose diurnal heating, as we get to the winter solstice, and as we go into these shorter days into January, February, the second half of the year, what we're expecting here is that flip. Are we still going to see above average temperatures at times? Absolutely. But the colder air will be colder for folks on the East Coast and even the central United States.
And are those just for the storms that push through, or just holistically, like it's just going to be a colder month?
This is just, well, it could factor that in too to a degree, but mostly this is looking even more macro than that. So it is showing, it would be showing just cold in general. And snowstorms aside, right? Really, the conversation here revolves around temperature. In order to get a nor'easter, you need to have colder air being advected farther south anyway. So what this is showing is, I mean, if we were having a conversation about snow, yes, there's a higher chance of that. But if we're just focusing on temperature, even still, what this is indicating is that our polar jet, which has really been non-existent, is going to begin to amplify a little bit more. Pacific jet will stay the way it is. And instead, we're going to get more of that cold air to push farther south where we haven't seen it. So along the coast, East Coast, and Mid-Atlantic.
Okay.
So Brandon, it looks like you're setting up a channel that looks like the channel going to the northeast of a colder air.
Correct. Yeah. And that's because, I mean, again, if we were to draw this out, let me just draw it out one more time for you guys. So imagine this is my polar jet. Let's make that a little bit bigger here. Imagine this is our polar jet, right? And then here is our Pacific. The reason why you're seeing the Northeast tend to be a little bit even more colder than, say, the Midwest is because both these jet streams are converging right over the Northeast. The only difference is the cold air is being advected farther south. So what we've seen over the last several weeks is if you lived in Maine, Vermont, New Hampshire over the last month, you've been getting the cold air. But for everywhere else that's heavily populated, not really. It's been mostly rain. It's been above average. We're going to see that flip for January, February, because again, that polar jet's going to really begin to amplify a little bit more, get a little bit more strength to it, and advect that cold air into areas that haven't seen it yet.
Okay. And now, so essentially it's playing into the same plan that you'd laid out in September, October, which was choppy start to winter. It's going to be a late winter, but it is going to be a strong winter for January through March. Let me ask another context question.
Sure.
With the 30-year normal period, that recently changed. It was a different period of time. So when we stared at versus normal last winter, we were looking at a different data set. Do you have a, I didn't prepare you for this question, probably like, don't put me in a box there. Would you say the period 1990 to 2020 is more colder than the period prior? So the quote unquote normal that we used for last winter, what does that shift look like? What, like when people are looking at normal, and I know I surprised you with that. I apologize.
Oh, it's impromptu. This is great. No, it's totally fine. Listen, I think from the contextual point of view on the numbers might be one of those things for me to get confirmation on. But here's what I'll say, right? With regards to 91 to 2020, we kind of talked about this last time a couple weeks back. But with that 30-year sample size, I would actually make the argument subjectively that it's technically warmer bias than, say, the 1981 to 2010. Because it sort of even picks up more on those temperature swings, too. Just because 81 to 2010, if we look at those 30 years in comparison to 91, 2020, my subjective argument to you would be we've actually seen more of an erratic pattern, right? To where we're seeing more warm swings, cold swings. Pretty much the last 3 months, I would argue, has been pretty frequent at times, even in the last 10 years, from 2009 to 2020. So to that being said, if we're seeing cold temperatures, and by the way, this climate model, CFS, notice how we just switched to 81, 2010. I would argue if we were looking at 91 to 2020, that this might actually output much colder than average because of those temperature swings that it's picking up on. Does that kind of answer your question? So I think it's more so of it would actually come in a little bit more warmer, I would argue, than colder. I think the 81, 2020 might be a little bit more of a colder average than, say, this last 30 years.
Okay, so colder than normal should be kind of watered down in our head versus a colder than normal from last winter data set wise.
Right. In this case, though, let's remember it's still pulling from 81, 2010. So when I looked at this model, the ensemble weeklies. So let's go back a second, because that kind of may fool a few people if you look at it, right? So if we go back here to the 7-day average we just looked at, that's pulling from 91 to 2020. However, when I pull from the CFS, this hasn't switched over yet to the new data set. It's still pulling from 81 to
okay.
2010. So
right.
Look at the month of December, for example. Notice how it's incredibly warm. It's showing that.
Yes.
I mean, in comparison to those 30 years, oh, gosh, yeah, of course.
Yeah.
Right? You're going to see it well above average. And then meanwhile, for this, the fact that it's outputting colder than average for this last 30 years, it wouldn't, to your case, it wouldn't be talking about like, say, 30s and 20s. It'd be more like maybe the teens into the 20s.
Okay. Let me pause for just a second because I'm just going to field a couple of quick questions.
Sure.
Austin, we'll circle back to this towards the end, but I think you are spot on that there is, with the increase of Waha to the Gulf Coast, we'll touch on that and we'll show a little bit of data at the end. And let's see, James, great to see you. So glad to see you. We're actually going to talk about Europe next. And if Europe has a supply crisis, can the U.S. assist? The U.S. is pretty much tapped out on their LNG export capacity, which means it's going somewhere. So there's not incremental capacity to ship more out. However, there could be cargoes that are diverted from Japan, Korea over to Europe. That so there's kind of some displacement effect, but then it's really kind of a competing between those two. And again, I'll touch on that towards the end.
And Brian, they might be able to pull about another half a BCF out of those export capacities right now. But they'd have to operate above their nameplate, and they don't like doing that very often.
Okay, and then I'm gonna come back to you in just a second, Brendan. So JY28209, love the name. I presume the weather pattern shift in January, February is known to gas producers. Then why are they still running on full or near capacity? To clarify, why are gas companies still producing so much in December? So when you have production, it does not turn on and turn off like a faucet. There's a lot more complicated pieces of equipment, and typically these investments were made a year ago, or decided on a year ago, or 6 months ago, or 3 months ago. So the price is so much different to where they can't respond to where the train is going. You can't really slow it down. That's a very truncated answer to a very nuanced question. So we will have another discussion on this one in the future. And
Brian, don't you think one of the good indicators on that is to follow what storage is doing, how much is coming out? Because if there's any excess gas, it's going to storage, or it's reducing the amount that we're pulling out of storage.
Right.
And so if you're looking for something that sort of gives you the gas gauge on that, I would think storage would be one, and LNG exports is the other.
Yep. And so hopefully this kind of gives everybody a little bit of insight. So that kind of introduced, thanks to James at Arcus FX, for those that are actually looking for trading signals, Arcus FX is a phenomenal opportunity. It's reasonably priced, and he provides so much content, so much information. James at Arcus FX, he's gonna in the comments below. But so with that question about Europe, we already said European storage is 90.4% full. However, we have been getting a little bit closer to that normalish category. What is if we're gonna have a colder than normal January through March, rest of winter, is it gonna be similar for Europe? What does Europe look like?
Pretty much, to answer your question short.
Okay.
Essentially, so we talk about with the United States, just as a reminder for folks watching, we always look at El Nino and what's happening out in the Pacific for most of the United States. With the exception of the Northeast, that's when we start to focus on what's called the North Atlantic Oscillation. And that's also where we focus in for European weather. Right now, we are in November. Last time we spoke, we were actually in a negative NAO. So temperatures were somewhat cooler for places like West. Yeah.
Negative what?
North Atlantic Oscillation, NAO. NAO. As a reminder. Okay.
You gotta bring it down to, Bring it down for me.
I'm getting excited, Brian.
I know.
But listen, so a negative North Atlantic oscillation, right? So we talk about essentially.
Is that like a conference?
Should be.
There's got to be a good Christmas clip in there for that one. But,
Yeah, I would say so.
but essentially what that correlates to is cooler temperatures for Western Europe. We've now flipped to a positive North Atlantic oscillation, meaning temperatures in the North Atlantic in the sea surface temperatures are warmer than average. What that means for Western Europe and most of Europe is that we would see essentially above average temperatures.
Okay.
The thing is with the North Atlantic, not to go too into depth, is that it tends to oscillate a lot more month to month than, say, El Nino in the Pacific, just because of where it's located in the North Atlantic, right? So we are expecting that to switch back to more of a neutral, meaning that if we look here at our climate models, you start to switch over to a bit of a cooler period for even as far east as, say, Eastern Europe and Northeastern Europe.
Yep.
And then by the time we get to February, it sort of transitions back to warm. So when I say neutral, guys, it's sort of choppy waters as well, right?
Okay.
So we are going to cool down slightly, but it's going to be kind of choppy. So imagine if we take the United States weather, we take Europe, we're sort of taking an inverse. So we've had that choppy weather for our first half. We switched to colder. These folks, it's going to be sort of inverse to where now they're going to be experiencing some choppier conditions. So sort of
okay.
Flux,
So
right?
we
so we're kind of on
started
two
off
different
choppy.
wavelengths here.
We started off choppy. We're going to end cold, and now they're going to enter the choppy period, right?
Correct. Exactly.
Okay.
Exactly.
Okay.
For their own reasons, right? I mean, different wavelength here. But I guess to summarize, to kind of wrap us all in a bow, guys, I mean, for December, I'm really expecting us to be still above average. I'm not anticipating, a major cold snap or something significant to really discuss here, other than it's just going to be well above average through Christmas and possibly even through the new year. Once we get to January, February, and if I was to even get a little bit more specific with you guys and for the viewers, I'm looking at more like middle of January, especially setting.
And you're back on the U.S. now.
Correct. The United States.
Yep. You're back on
the United States, seeing the flip to colder January, February, middle of January to start. For Europe, as we just talked about, I expect more of an inverse. So for January, February, the second half, I'm expecting to see, a little bit more of some choppier conditions, some warm periods, some cold periods, kind of mixed in, exactly what we've seen here in the lower 48 over the last several weeks.
Okay.
She gets kicked by a mule, they go back to normal.
There it is.
Yeah.
We had to sneak that in there. So,
guys, I'm eating junk and watching rubbish.
So, well, listen, I think that gives us a good context, and we are going to keep the line open probably for the next 5 minutes or so, and we will stick around to answer any questions. So if you have them, let us know in the next 5 minutes. Otherwise, we're probably going to close off in about 5 minutes. But to recap, the U.S. for the balance of December is probably going to be pretty warm, and which is pretty nice for. Go ahead, Bill.
I would say it's warmer than average. I wouldn't call it pretty warm. I call it warmer than average.
Warmer than average.
Because it's still, that you're not going to be out there in your polo shirts in Wisconsin. I'm pretty sure.
But, I sure am. Absolutely. Illinois, Wisconsin. This is short weather. This is great.
Well, of course, in Wisconsin they wear polo shirts till like January anyway. But
James, thanks for stopping
James.
in.
And so I think, Brian, go ahead. We're going to be.
I was
warmer
just
than
gonna
average.
show, and unless he already dropped off, I was going to show kind of our arbitrary capacity on LNG exports, which we're currently about 14. Let's see what it is. 14. What is LNG? 14.1 BCF a day. This is our total capacity right now, and we are in 2014. We're right at our capacity. So this gets back to James's question. If Europe gets really cold, could the U.S. provide more? No, it would come via cargo displacement. So that's
I think they can go above their nameplate though, Brian. That's what I've been reading a little bit upon these LNG facilities.
Oh yeah. Oh, they totally can, and a lot depends on the ambient temperature outside as well.
So what you're seeing here on these capacities we show, that is their nameplate. And so they can usually go probably at the most 5% above their nameplate, but they can go above it.
Yeah. I mean, currently our capacity is pretty well topped out. And the other question, let's see, the other question, I was going to get back to Austin's question. Austin had a great question, which is, what is the impact of Permian Highway? And let me take a look at that. So first off, when we're talking about Permian Highway, there was a lot of oil production that was held back from infrastructure. Permian Highway and Whistler were the two expansions, compression, and increases of capacity that did provide a punch to incremental gas coming out of the Permian. But I want to be very clear about this. These wells, we are currently dropping rigs in the Permian, and we're not replacing as much gas in the Permian Basin. That said, the reservoir is getting gassier. But in month one, a Wolfcamp oil well may produce 1,380 barrels of oil a day. By month 12, it's already down to 217. So you're approaching an 85 to 88% decline within the year one. So I think this short term is I think it is oversupplied. We are currently oversupplied in the marketplace at 105 BCF. We don't expect us to continuing to add production. I think, as you were asking about the Permian Highway, these are going to be short-term hits. In 2 months, we're going to see it taper off probably by half a BCF or more.
So I'm clear for something that Brian said. We're going to see added production. We're not going to see net added production. Where our declines will still be going. We'll still have rigs after drill, and they'll still be bringing some gas and oil on. They just won't bring it on in enough quantities to overcome the decline that's gaining on them right now.
So to amplify that, and all these charts are in Rogue Edge if you want to learn a little bit about it. But let's just take a look at only the Permian, and let's take a look at 2022 to here. So as you see, we have been growing from 20 BCF a day to over 24.5. So, but you can see the slope kind of starting to change. What we track is the decline. This is how much the Permian is declining every single month, over 670,000 MCF a day. Every single month it declines. So then it really depends on how much new production is added. And in the US as a whole, we're adding less and less because of the rig drops. And as you can see right here, we are still adding production, but at a much lower pace, because we were at 800 last year. We were at 840,000 MCF a day every month that we were adding. We're down to 768, and I expect those lines to cross coming in very, very, very soon. So,
and one of the things you also have to watch on the rigs is when you're counting rigs, we've seen some rig efficiency numbers that are pretty good, but they're not on every rig. They're only on a certain number of rigs that are having that kind of efficiency. And so the impact can't be extrapolated across the whole production scale.
Yep. And let's get back a week. Giorgio's got a great question. Can we say that fundamentally one could expect natural gas bullish prices for January and February, maybe above 3? Okay, so first off, we're not financial advisors. We're not trading advisors. We are not a trading service. We do offer our perspective, and I am a personal trader for myself, for my own account. If you want a pricing service, James at Arcus FX is a phenomenal resource. We do provide our perspective, but we are not a price signal service. We are a fundamental focused shop. That said, I would expect at least a move. Well, let's take a look at the futures and see where we're talking about, because when you're talking about multiple months, we need to look at different contract months.
Right. So, also, Giorgio, when you say bullish, we're going to say from today's price, that's what we're going to use as our marker.
Yep. So when you look at futures, you have to define when you're looking at futures. We are currently trading, this is based on last night's close, which was 231, which is pretty close to where we're at right now. When you look at past Christmas, we're going to be staring at February's contract, which is currently trading below January. So, and March is trading even below February. I would expect these to reverse trend, but I want to point out something. This is not a typical shape for the contract months for the year. So when you look at a typical shape, January, February are going to be high, and then it drops off in April, May, bottoms out and climbs back the rest of the year. And if you look at 2024, we're kind of staying pretty flat to this May period of time. I would expect this to be lifted. Now, from a pure technical trading standpoint, let me change this to a daily chart. And James at Arcus FX actually just dropped a video on this morning. It's really good if you are curious. And let's just take a look at this. From a technical perspective, I see 250, again, not financial advisors, 250 reemerging relatively soon. And I would expect a retest of 276.2. And that's what I see as kind of the bull bear moment, is what we do at 276.2. There is a gap all the way up here at this 350 that will be achieved at some point in time. Will it happen in the next 90 days? I think there's a high propensity to say yes. But again, this is my personal perspective, not a financial advisor, not trading advice. See all the disclaimers below and fall asleep. So
Right.
if you want to fall asleep, read disclaimers. Sorry for any attorneys out there.
But if you want to stay awake, subscribe to Prestige Weather.
Yes.
Those guys are always out there giving you what's going to happen there, and they don't mind predicting the weather. So they're probably better at predicting the weather than we are predicting prices. So
are you trying to?
You'll shoot your eye out, kid.
We get paid to be wrong, right? So
yes, exactly. So Brendan, listen, we appreciate you coming on today. It was great to see how this weather thing works. One of the things you said in one of our earlier visits about watching the Canadian snowpack sort of helps us understand when cold weather's coming. So
wait,
now
where are we on that? Are we packed?
Yeah. No, great question. Do you mind if I share my screen one more time? I can actually share
Yeah,
real quick.
Let me put this up.
Great question. And I was actually looking at this morning. So if we just look for a second, this is where we were at just 3 years ago, 2020, December the 14th, right?
Okay.
This is showing snowpack and ice pack over some of the lakes as well as the water bodies up north.
So the orange is ice pack.
Orange is ice pack, blue is your snowpack.
Okay.
Right? So this is where it'd be at if we were talking about 3 years ago. Keep an eye on the lake and the ice sheet, right? We go to 2023, huge drop off. We're way behind.
Wow.
So our snowpack is severely deficient in a lot of the Canadian provinces.
Okay.
Our ice sheets are relatively weak and not uniform.
Okay.
So it's not just an issue of that polar jet we talked about, but to your guys' point, the snowpack is really lacking. The only area that we've actually seen colder temperatures so far is in your neck of the woods, in the Rockies, because you've actually had quite a bit of a snowpack to work with.
We
right?
have.
So, and that's been frequent over the last several weeks. So yes, I mean, we're definitely far behind. And I think that's what attributes our thinking to where the rest of December is going to be warmer. And then that second half will flip, not just by the jet stream pattern, but just where we're at with snowpack.
Okay. Okay.
Yep.
Awesome.
Great question.
No, that makes sense. Okay. Well, listen, everybody, thank you so much for joining us. Again, if you're serious and you want to understand weather, if you are trading natural gas, you need to be following Prestige Weather. I mean, it's a silly decision. It's $5 a month, and they have information where they are tracking on their Discord channel so many different areas. I have trouble keeping up with everything that they have there. But
hey Brian,
yeah.
Not to interject, what price was it at?
Only $5 a month. Actually, I think it's less than I think it's $4.99. I think that's actually the price. So it's actually less than $5. It's not even. It's less than Starbucks. If you want to get a fancy Starbucks, you know, I mean.
Hey guys, splurge, spend $10, get a Starbucks and subscribe to Prestige Weather, and sit in Starbucks and watch Prestige Weather.
Yep. So the thing is that if you're serious about, if you are trading natural gas, you need to understand weather, and Prestige Weather is the place that we go. We are currently as a combined effort, we are co-developing something that will combine natural gas and weather, and that announcement will be forthcoming. So stay tuned, and in the meantime, drop us a like, drop us a comment, drop us a share, and prestigeweather.com, energyrogue.com. Thanks so much for showing up. Really appreciate you. And I'm on my gratitude journey, aren't I?
Yeah, there we go. Thank you.
So any parting words, Brendan?
No, I mean, it's going to be warm, but don't count out the second half. We're going to see definitely that change come in. It's going to get cold.
Okay.
Yeah, no white Christmas. No white Christmas in Oklahoma.
Not going to happen.
Yeah.
So, Bill, any parting thoughts?
Well, I'll tell you what, folks. What you need to be paying attention to, whether you're trading on the financials, trading fundamentals, just always look at, now that we're coming into the holidays, it's going to be a very volatile season for all that. So, don't step out there unless you got money to lose.
Yep. December is a very tricky month for any traders out there. So listen, hope you're doing great. We will be back next Wednesday. So we're looking forward to talking to you then. And drop us a comment if there's something you want to learn a little bit more about, because we're always looking for new ideas. So thanks so much. Hope you have a great day, and we will talk to you soon. I cut off Bill.
No problem. I'm just telling you to run the logo.
Okay. See ya.